The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we got 3 days left before this year is in the history books, and we want to save you money. We want to get you ready for next year. We're going to get you all set up for that, but you got 3 days. I mean, hey, why wait for the end, right? We got 3 extra days.
You can keep procrastinating. Come on.
You can't procrastinate much longer, Chris. And I got Christopher Fabian and Tiffany Fabian here in studio with me. Hey, guys.
Hey there, Esther.
Hello,
Esther.
I bet you
Merry
didn't
Christmas.
do what I did.
Happy holidays.
What did you do?
I took down my Christmas tree today.
I thought about it, but my daughters are home, so I'm leaving it up a little bit longer.
You know,
It's
I
not
mean,
looking
it was
very
like
happy, the
wrestling,
tree.
because I got like a 12-foot tree, so it was like wrestling hippopotamus.
Oh.
I have scratches all over my body, but I put it away. It is done for another year. It's wonderful when it's up, but it's great when it's coming down, right?
Yeah.
Because then you know that it's tax season.
Yeah. It's almost that time.
Okay, so part of the things we want to talk about, you know, I mean, really, when I think about what's going to happen here in 3 extra days, I think people are going to be shocked to see how all these changes affect them. And we are ready and waiting in the stable to help everybody. We're going to talk about the forms, but more than anything, you got 3 days to make some substantial changes. You know, if you got a $3,000 write-off right now, and with state and federal, you'd save almost $1,000 in taxes. Now, to me, that's a lot of money. And so we want to talk about how you could do that. And one of the ways would be just to clean out your closets.
Right. Absolutely. I did that the other day. Well, actually, my daughter did that the other day, and I dropped off things to Savers.
But you wrote it down, took a picture.
Yep.
Right?
I wrote it down, took a picture, wrote down every piece that was in those 2 bags, and took a picture, and then delivered it to Savers. And then they gave me a coupon, and I said, I don't really want a coupon. I would like the receipt for what I dropped off.
But that's what's so important. And I will tell you, you know, today's Saturday, tomorrow's Sunday, then, you know, you still have time to clean out your closet, give non-cash good items to a not-for-profit charity. Make sure you take a picture of it, write down what you gave, and you can go to salvationarmy.org, and they have a list of the fair market value of everything, not what you paid for it, but what it's worth at the time you gave it for. And if it was $3,000, it's going to save you about $1,000 in taxes. Now, to me, if somebody was holding me up on the street and said, Esther, I want $1,000, I'd be pretty upset with them. By the same token, I'm telling you how to get $1,000.
Right. That's
so
right.
What were you going to do? Sit around and watch the Rose Bowl game on Monday? I mean, come on, right?
Right.
Is that
Absolutely.
Monday? Chris, you would know.
I have
Or is
no
that
clue.
Tuesday?
I don't know. Frank left the booth. I don't know.
Okay, and the same thing is giving gifts to charity. And I don't know right now if you can still do your charitable RM required minimum distribution if you're over the age of 70 and a half and you have to take money out of your IRA before December 31st because the penalty is 50% of what you didn't take out.
Right.
It's a gigantic penalty. I don't know if your broker still on Monday would be able to accommodate that, but if you did, it fulfills the RMD and it's not taxable.
And I got to tell you, Esther, I've had a few people who have neglected to do their RMD, and the IRS is getting more stringent about waiving the penalty. They've made us go through hoops and hoops and hoops.
Well, I mean, you're supposed to do it.
Yeah,
right?
yeah. But it used to be, you know, like if you asked for forgiveness, they would say, okay, you know, you're forgiven, but we have to prove that their husband passed away and that they were in turmoil, and
Right.
so just do it.
So I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on our cell phone, and our toll-free number is?
Good question.
It's 1-800-something.
Oh,
Wait,
here
wait.
comes Jay
Jay.
to the rescue. The toll-free number, Jay, is 1-800-8.
616-9236 or something like that.
WBEN.
Thank you, Jay.
1-800-616-WBEN.
I told you it was
And the
616.
text is
3930.
103930.
Yeah, if that's if you want, and we would love to have you join us again. 8030930, 8030930, star 930 on your cell phone. Okay, if you're a business owner and you know you did really well, and you think you're going to need a new copy machine in January or a new printer or new computers, buy them now.
Right. That's right. Buy it
Because you
before.
can do 179 expensing, and they broaden that, and you can save a ton in taxes.
Yeah, but something important to say is with the new 20% pass-through, look to see if you want to do a Section 179 because you might want to just appreciate it over its useful life. And
But the thing is, it gives you those options.
right.
Gives
right.
you those options,
Right.
right?
And so you want
the
to make
other
sure
thing
you
is,
look at all the options.
With the stock market, I mean, what a roller coaster it's been this last couple of weeks.
you need
but-
some Dramamine.
But I do believe a lot of people have made a lot of money in the market. If you have had stocks that you could sell now at a loss, you can take a dollar for dollar loss against other capital gains plus $3,000 against ordinary income. So let's say that your capital gains and dividends are $20,000 and you have a stock that's down 25. You can wipe out that gain, 20,000 against 20,000 plus 3,000 against ordinary income, and carry forward 2 to the next year. But I will tell you, I know the brokerage firms, I believe, will be open on Monday, and it'll still give you time to do it. So it's a last minute move, but it'll save you money. In that situation, you might save well over a couple $1,000s in taxes.
Definitely. Yep.
Okay. What else you got, Chris?
Oh, I was going to say,
Precepts, clerical help, go on.
you-
Oh,
By the way, we're looking for some great receptionists and clerical help. So if you're somebody that would like to stay off the frozen streets, January, February, March, and April, EG Tax is hiring some lovely people who like people who want to help. We have
Fast-paced,
openings for
fun environment.
fun. I didn't know it was fun.
Well,
Is it fun?
depends
I
on
think
what.
it's fun,
I think it's fun.
but it's wonderful helping people.
I know that you get hooked, I guess, is the good way to put it. You're with Debbie right now. She can tell you year after year it's just a great environment to be in,
Yep, right. So I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Other thing that you can do is pay up deductible expenses. Sit your butt down at your desk and get your business expenses and deductible itemized deductions paid before the end of the year, because in 3 days you can't write them off anymore, except for a year later.
right, including your rental property.
Right.
Get those.
Your rental property, your business. Maybe you got that last payroll of the year. Get it in before the 31st. Maybe you need copy paper, toner, things of that nature. Buy it now. Go off to Sam's Club on Monday and get your stuff, because all those things save you money.
Yep. Definitely.
Okay, and we're 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back with your calls on the other side. Hey, I'm Esther Gulius, the tax lady from EG Tax. You know what's going to happen in 3 days, the new tax year with all the new tax forms and all the new tax laws, and we're here in your corner to help you to sort it all out. I'm Esther Gulius, the tax lady from EG Tax, with Tiffany Fabian, Christopher Fabian, and before we go to Al, we wanted to
And talk
also
about our new locations and our moving and things like that.
But I wanted to first tell everybody, take your required minimum distribution. If you're over the age of 70 and a half, you must take your required minimum distribution by the 31st or face a 50% penalty of what you didn't take. So if you're supposed to take out 20 and you don't take it out, the penalty is $10,000. That is a big thing.
That's huge.
Right? And then, of course, if you're somebody that's going to be divorced, it would be great if you could get your divorce done before the end of the year.
One more day.
Well,
Or you're going to have to probably pay a lawyer a ton of money to renegotiate, because alimony now going forward isn't deductible on the federal.
right? right? On
Yep.
the federal. Okay, why don't we go to the phones? 8030930, 8030930, star 930 on your cell phone. We have Albert. Hey, Al, how are you, sir?
Okay, Esther. I was born August 16th of 70 and a half years ago.
Uh-huh.
And do I take my minimum distribution this coming month?
All right, so in August you turned 70, right?
Yes.
So that means you will not be 70 and a half until 2019.
Yes.
So that means you have to start taking your required minimum distribution next year.
Do I have to take it in January, or can I wait until later on in the year?
You can wait until later on in the year, and as a matter of fact, you can push it off until 2020 if you wanted to take a double distribution. So you could take a first one before April the 1st and a second one before December 31st. And if that's the case, then you would just double dip that next year. So you have the option of doing it in 2019, or you can take it before April the 1st in 2020, and again the second distribution before December 31st, 2020, whichever works best for your financial situation.
Okay, all right.
Okay.
Thank you very much.
All right. Well, Happy New Year, Al.
And when you make that decision, you really want to sit down with somebody, because maybe you shouldn't take a double distribution in 2020, and you really want to
Or
look.
maybe he should.
And maybe you should. You just
You
want to
know,
look
I
at your
mean,
financial picture.
So the whole thing is many people are taking minimum distributions and they aren't paying any taxes, especially now with the increased standard deduction on the federal
Right.
and the personal exemption. Seniors really have like $27,000 or $28,000 before they pay any taxes at all. They should take out, in many cases, more than the minimum distribution.
Yep.
Right? Because so many people are clamoring, oh, I want to put money in a Roth, I want to put money, so I don't have to pay taxes. They're not going to pay taxes anyway.
Yeah, my daughter's boyfriend just went and put money in a Roth, and he's 24, and he just put money into a Roth. And so you really want to look at your financial picture and see if that's a right thing for you.
Right.
Yeah.
Absolutely. I mean,
Yeah.
that means that he has a very good opinion of himself, that he's going to have a great big estate when he gets older. But the truth is, most people who have self-funded pensions, who have no other source of income, because the standard deduction keeps getting higher and higher every year, means that when they retire, if they're living off their Social Security and no other pension, just their IRAs, in most cases they're not going to be paying taxes at all anyway. So they don't get the deduction when they put it in, and they won't get the benefit when they take it out. So, you really have to put a pencil to the problem and see how the numbers work out.
Yeah, many people just hear that chime, it grows tax-free, and they just really like the sound of it,
That's true. That's
Yeah.
true. I'm Esther Gulias, the tax lady from EG Tax, 8030930. 8030930, star 930 on a cell phone. When's our website going to have all the tax law changes on it, Chris?
Well, the tax law changes are already up there with the New York State changes. You'll be seeing soon. Make your appointments at all our branch offices. So the website is up to date and ready to go.
All right, and we did move our corporate headquarters from 2475 Niagara Falls Boulevard. That will remain a branch office to 1890 Colvin,
Right.
not too far from that blue jet.
Yep.
And what's so great about the Colvin address is that it has a great big parking lot, so nobody has to trudge over snow piles to get into the office. So that'll be a blessing. I'll tell you that.
Yeah, and then our old office at 2475 still remains, and it's a good option. It's going to be managed by Phil, who's been with us for over 10 years, and so it's a great place if you still want to go there to Niagara Falls Boulevard.
The other thing is, with this year, the tax law changes are gigantically sweeping, and so President Trump really wanted the postcard-sized tax return. And so I think to placate him, they gave him a postcard that is half a sheet and half a sheet, whereas the 1040 EZ was one sheet. So, okay, but you need the two halves. You have to print it off.
And not to mention the other 6 halves.
Okay,
So
but
she,
then there's 6 schedules to make it work. So the first schedule, Schedule 1, is additional income and adjustments to income for taxpayers who have to report additional income such as capital gains, unemployment compensation, prizes, awards, gambling winnings, or have any deductions to claims such as student loan interest, deductions, educator expenses, or self-employment taxes. So to that half page and half page, you're going to attach another half page plus all the supporting forms, right?
That's right. So
And then the other, to make that half page and half page work, there's another new schedule. It's called Schedule 2. And this is for people that have alternative minimum taxes or need to make an excess advance premium tax payment credit repayment. That's Schedule 2. Then there's Schedule 3. And again, this is all attached to the half pages. Non-refundable credits for taxpayers who can claim non-refundable credits such as a child tax credit or a credit for other dependents such as a foreign tax credit, education credits, or general business credits. And then the other new schedule is the Schedule 4 for other taxes for people who owe other taxes such as self-employment tax, household employment taxes, additional taxes on IRAs and qualified retirement plans, like for not taking money out of your RMD. And then Schedule 5 is for other payments and non-refundable credits for taxpayers who can claim a refundable credit such as the Earned Income Credit, the American Opportunity Tax Credit, additional child tax credit. And then number 6, this is all attached to the half page.
we just had our
Foreign
meeting,
tax-
and it was
Foreign taxes and third-party designees, and so that's what the new forms will look like. So you're going to have the half page, and then all this supporting stuff, plus your other schedules that are going to go to there.
yeah.
Now-
We'll go on, Chris. I'm sorry. What
imagine, because the federal government doesn't take amended returns electronically. Imagine sending in a paper amended return to the federal government, how thick it's going to be.
Yep,
I never thought about that.
yep. Well, we certainly are going to be killing a lot more trees this year.
Oh,
that's for
yes.
sure. Well, why don't we go to the phones, and we're going to talk to Fran. Hey, Fran. I'm Esther Gulius. How can I help you, my dear?
Hi, Esther. How you doing?
Good.
Well, I have a question. I'm 72 and retired, and last year I went to Jackson Hewitt Tax.
Uh-huh.
And, I live on probably. Well, they told me I have a pension and my Social Security.
Okay. How much is your pension, Fran?
My pension is $748 a month,
Okay.
and
And your Social Security is around $2,000 a month?
yeah, it's they take out for the Medicare. So
Okay.
I went there and they said, well, you don't have to pay any taxes.
You don't?
I don't.
Nope.
Hey.
So make sure they don't withhold anything, and you're in good shape.
All right, that's great, because I went there and it was like $200 to pay them, and they really gave me a good. I mean, they didn't really charge me because I.
Well, they shouldn't have, because you didn't have to file.
All right, well, thank you so much.
All right, you're very welcome. Thanks for calling.
Yeah, well, you have
Happy New Year.
And
Thank you.
she's one of those people who has money in an IRA. She could take some out tax free every year.
That's true.
So
That is true. If she did have money in an IRA, that would be a good plan. And again, if you hear anything that you say, gee, maybe we should ask, give EG Tax a call at our corporate headquarters, 632-7886, or go online at egtax.com. And just because you aren't required to take money out of your IRA doesn't mean that you shouldn't take money out of your IRA, because the standard deduction is so high that you actually have this buffer before anything's going to be taxable at all. So this way you can start withdrawing that money kind of pre-tax, and it won't be taxed. So again, that's something we want to help you with, right? And let's go to Gordon. Hey, Gordon, how can we help you?
Good afternoon, Esther.
Hey, Gordon.
I just wanted to give a shout out for Tim Eliason, who has been tremendously helpful in
Oh, how nice.
lining up some health care for me. I'm between assignments. That means I'm not working. And he's gone above and beyond whatever I could have expected.
Oh, that's so great. You know, we think that too.
I don't-
EG Health Connect is a division of EG Tax, and Tim Eliason is the president of EG Health Connect, and his job is to make sure that he can put people in the best, most cost-effective effective and best health insurance possible. And there's no charge, right, Gordon?
No, there was not, as I said, he's gone above and beyond, and I don't know.
He's really, really good
Well,
at
we
it.
really do appreciate that shout out, I will tell you.
Well,
Yeah.
you provide the service that you do, but it's tremendous.
I
Well, thank you,
I
Gordon.
like how you said you're between assignments right now. That's cute. I liked
That's
it.
right. That's true. Well, thank you, and you have a great New Year's.
Yeah, you too.
And good luck with
All
your
right,
job
thank you.
search.
And
All
Gordon, I wanted to let you know I just texted Tim and I told him about the shout out. So thank you very much.
I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. I know we have calls holding, but I'm afraid with the bottom of the news coming up so quickly, I wouldn't be able to get into them effectively. So make sure your calls come in as soon as the news is over. We'll deal with them. Other things we want to talk about is don't forget that our corporate headquarters has moved to 1890 Colvin, and if you need any tax help on the 19th of January, all of our offices open.
17th.
17th.
No,
and then
it's-
there'll be real people in the branch offices that can answer your tax questions. I know that a lot of people think that they're ready to file their return right away as soon as their W-2s come out, but unfortunately, the IRS is kind of not open for business till a little later, right? But we can get everything ready, and the minute they're open, boom, we'll get them going, right?
Correct.
All right, we're going to break for news. I'm Esther Gulius, the tax lady. Talk to you on the other side. Hey, I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. We love to hear what you have to say because you're who we want to help. And I just saw McDonald's change their recipe for their pies. So
Again?
they took away a lot of the artificial colors, preservatives, and high fructose corn syrup.
So it's not
And
going to
so-
be good.
So it's only 240 calories of pie.
There's a text question. It says, "Is the IRS open now with the federal government shutdown?" Cha-ching.
Yeah, the
They're-
IRS is
Moneymaker.
open. Yeah, the IRS is open.
Yeah, they're a big
But they're not
moneymaker.
accepting. They're getting everything ready for tax season, and I'm sure that with the government shutdown, it may cause a problem going forward. But hopefully, the government shutdown is not going to
That's
go on that much
a
longer.
really good question.
Right. Okay, let's talk again. 803-0930, 803-0930, star 930 on your cell phone. Things to watch out for this year. All those new forms that I just told you about, those schedules. But more than anything, the important thing is the federal and the state of New York no longer are in bed with one another. It used to be that the income from the federal flowed over to the state, the deductions from the federal flowed over to the state, and they were pretty much in sync with one another. Now, and I really do think it's a whiplash kind of from the fact that the SALT deduction is so limited on the federal that they won't let you take the state and local taxes as a deduction on the federal. The state of New York has basically said whatever the deductions were in 2017, even though the IRS won't let you take them anymore, we will. So you're going to have a situation where people that can't take moving expenses on the federal can on the state. People that were over-the-road truckers that couldn't take the deduction on the federal can on the state. People with maybe over-the-road salespeople, office and home, continuing education for your job. Brokerage fees that weren't deductible, tax preparation, and attorney fees for getting taxable income. All those things are going away. And the property taxes that were limited on the federal, that's going away. But on the state of New York, they say, go for it.
I can't tell you how many of my clients have been talking to me lately, and they're like, "Oh, I feel sorry for you. You got to do like 2 tax returns."
You do. I mean, and so, but the worst part is the information you're getting is from the taxpayer. Mm-hmm. And if the taxpayer says, "Oh, I can't," people walk in with this preconceived idea, "I can't do this anymore," but it's not true. You can't on one, but you can on the other. And the one on state of New York, it's not small potatoes. It's a lot of money. If somebody was taking an extra $1,000 from me or giving me an extra $1,000, I'd pay attention. Yeah. And those are the things that you have to be careful of. So the federal, it is true, the standard deduction has increased. Married joint to $24,000, $12,000. If you're single, $18,000 head of the household. But on the state of New York, it's still those lower standard deductions and the ability to take the itemized deductions that you can't on the federal. So that's real important.
And then also, just to put it a different way, I would hate to give New York State another $1,000 just to
Right.
put it another
That's-
way.
Right, but the thing is, of course, they're going to allow you to itemize. But again, if you don't know, what you don't know when it comes to taxes really can hurt.
Yeah, because they're not going to send you a letter saying, "Hey,
My
Bob,
gosh.
yeah, you itemized in the past. Why didn't you do it this year?"
That's right. That's right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. And we have Marianne. Hey, Marianne, how can we help you, my dear?
Hi. I commuted daily to Canada to work for 30 some odd years. So those years I did not pay into U.S. tax. Now, I still have enough quarters to collect on my U.S. Social Security. But what is the windfall provision? I don't understand what that is.
Okay, first of all the income that you received in Canada, if you were living in the United States, was all taxable to the United States. Are you aware of that?
It was my world income. I filed in both countries. I don't know who got the money.
Okay, so you did
probably
file.
I did file in both countries.
Okay, so then you were paying into Social Security.
No, she had a Canadian employer, so she paid into.
Okay,
Yep.
I gotcha.
So I paid into Canada's Canada pension, but I did not pay into the U.S.
Okay, but you do have your 40 quarters. Have you talked to Social Security?
I tried.
And what happened?
I couldn't understand what they were talking about with the windfall. I don't know. Do you collect? Would I be eligible to collect my Canadian their version of Social Security along?
Well, certainly, if you're entitled to collect from Canada, you are also entitled to collect in the United States if you have your 40 quarters. So have you talked to them at Revenue Canada?
They told me to talk to the U.S. You was telling me to talk to Canada.
Oh,
You know what
jeez.
you might want to do before we get busy is make an appointment, come in, we'll make the phone calls
For you.
to both of the taxing agencies
no
for
charge.
you, and we kind of act as interpreters. You know, I mean, because really sometimes they're talking in language that you don't understand. So you can come in, there's no charge, and we'll make those calls for you with you sitting in front of us.
Oh, that would be wonderful.
Okay? Our phone number is 632-7886, and we're open 9 to 5 until when?
Until the
17th.
17th, and then we're open
and
till
then we're open
9.
9 to 9. But of course, Revenue Canada and Social Security closes around 4 o'clock, so you want to get in earlier.
Perfect. I
Okay,
will.
dear?
Appreciate it. Thank you.
Happy New Year.
Thanks to you, too.
All right, thank you. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Okay, so things to watch out for this year. New York State is your friend, sort of. Make sure you save your receipts because you know they're going to not send back refunds without verifying all those deductions, right?
Oh, no, they will not send. You make sure you save your receipts, save your cell phone bills, your receipts if you go to restaurants.
More than anything, I think I'd change my withholding on, for sure, the federal and New York State. You don't want them to have your money and then keep hoping that they're going to give you your money back.
Yep.
The other thing is children under the age 17 save you a lot of money. The kids are under age 17 that live with you, that are your qualified dependents, are worth $2,000 this year.
Yeah, and then the phase out is $400,000, which is different from when it was like 170.
Which is a good thing. So you'd have
Yeah.
to make over $400,000 not to make this money off your children under the age of 17. And if your children are 17 or older, then they qualify for the new family credit.
Right, the $500 credit for someone listed on your return that is not under the age 17.
That is 17 or older.
Yep.
Right?
Yep. So mom,
or
dad.
any other dependent that's a qualified individual.
Right.
Right. Now, here's the important thing. If you are a non-custodial parent, you're the parent who does not have physical custody of your child, but you're paying child support for that child, that's tax-free to the recipient. When mom gets the money, it's tax-free to her. Many times, the dad, who is the person paying the child support, expects that he is going to claim the children on his return. Not true, necessarily, correct?
Correct. You have to, new with divorces going back to 2009 to current, the only way you can claim your child is if the custodial parent releases them to you by using a Form 8332. The
So I will
IRS.
tell you right now, before it's tax time, before, I would suggest, and if you need the Form 8332, call our office. We'll be very happy to give it to you. Kind of go with a box of candy and some chocolates and some flowers and say, I'm paying you $20,000 for the kids. Will you give me the right to claim them? Now, I will tell you, one of the good things is sometimes if you sweeten the pie to I'm thinking her, sometimes if you give her a piece of the action, she'll give you part of it and you can give her part of your refund. And you can actually designate that refund to go specifically to someone other than you when you file your return.
Yeah, good point. And then also you can fill out that release of claim for future years too. So something to consider,
Right. Okay, I'm Esther Gullius, the tax lady, 8030930. 8030930, star 930 on a cell phone. Don't forget pass-through deductions. Now, what does that mean? That we're building a tunnel?
The new subway for downtown Buffalo. No,
That's the 20%.
for businesses, partnerships, or S corps, sometimes rental properties, where if you have a net profit from those activities after your adjusted gross income and your standard deduction / itemized deductions, you'll be able to take a 20% additional deduction of that net profit.
So if your net profit was $100,000, right?
Yep.
You get a $20,000 write-off,
Right.
right? And if you're in the 20% bracket, you save $4,000 on the federal.
Yeah, that's incredible.
So that was Congress's way of saying, okay, we took the top down, and they're now a convertible on C corps. They're now a flat rate of 21%, and so to make it fairer to other businesses, sole proprietorships, LLCs, subchapter S corporations, they said we're going to take and let you do a 20% deduction. And I will tell you, you should be dancing around the flagpole if your business is making money. Now, if your business is losing money, then that loss carries forward to the next year and would offset the next year's
If you were
20%
entitled.
pass through, because you want to make sure you don't have your business go into the red.
Yeah.
That's another thing.
And it's really important that when you're filling out what type of business you are, there's different codes for what type of a business you are. And if you're a service corporation, you lose that entitlement if you make over 315.
Right, and so those codes that you have maybe been filling in 99999 is not a good thing right now.
No.
Let's go back to the phones and we'll talk to Art. Hey, Art, how are you, sir?
I'm doing real good, Esther.
So what can we
Turn
do
down
for
your
you?
radio, Art.
Yep, I just did.
Okay.
Okay, what can we do for you, sir?
You can help me with my taxes.
Yeah.
We do that.
My son is 21 years old,
Uh-huh.
still in college.
Uh-huh.
He's going to make about a little over $6,000
Mm-hmm.
in 2018.
Mm-hmm.
So I address that with my taxes.
Okay, so he's going to file his own return. His standard deduction is $12,000, so he's not going to pay any taxes on the federal. He will pay some taxes on New York State, not much, but he will pay some taxes on New York State. Daddy gets to still claim him, and if he has, unless he has a full scholarship and there's nothing that you have to take out of your pocket for his college, then you're going to get an American Opportunity Tax Credit. I'm assuming he hasn't been in school for 4 years, correct?
Yeah, he's been in school for 4 years.
You said he was 21. In college.
Yes, ma'am.
When did he start?
He could be working on his a second degree.
So when did he start, Art?
4 years ago. Later this year, he starts his master's program.
Okay, so if you've already taken the American Opportunity Tax Credit for 4 years, then you're going to move to the Lifetime Learning Credit, which would be 20% of his qualified tuition and expenses.
Oh, okay.
But to reiterate, you get to claim your child, which is really exciting. And then he's
Right.
going to file his own return and indicate that he's a dependent on your return, so he'll lose his personal exemption, which is no longer anymore,
Right.
anyways. But you get to claim him.
Okay?
Do I still get to claim all his books that we buy?
Yes. Yep, for the lifetime learning credit.
Right.
Yes.
Depending upon whether, and whether it
If
has
they were
lifetime learning or
required.
American Opportunity Tax Credit. Yes, you can.
All right, I'll be in
Okay.
your office again. I've been there the last 3 or 4
Oh,
years.
you're so sweet, Art. Thank you. Happy New Year, sir.
Happy New Year to you, Esther.
All right, thank you. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930 on the cell phone, and we're going to take a short break, and we'll be back with your questions on the other side. Hey, I'm Esther Goulias, the tax lady, 8030930, 8030930, star 930 on the cell phone. I got 3 days to take the iron out of the fire, so to speak, and save you some money. We're also talking about some of the changes that are coming up. All of our offices will be open on the 19th. Our supervisors will be in the offices on the 17th. Our corporate office at 1890 Colvin is open 9 to 5, Monday through Friday, and starting the 19th, it'll be open 9 to 9. The IRS won't be accepting tax returns electronically towards the end of the month of January. You can come into our offices. We'll get you filed and get them all set and ready to go. We get them sent into our transmitter, and then the minute the IRS starts taking them, boom, you'll be the first guys in line to get your money. Remember, if you got an earned income credit or any of the refundable credits, they're going to scrutinize them, and they're going to hold them up more than ever. And so we offer the Easy Advance, which is basically a loan on your tax refund. So that'll help you get through, and it's a very reasonable way for you to get your use of your refund money to pay those Christmas bills, right?
Correct.
All right. And so other things we want to talk about, if you got a hobby or you got a not-for-profit rental, this is just not a good thing for you.
No, not at all. There used to be at the bottom of the itemized deduction, you could take up the expenses up to the earnings for that hobby or non-for-profit rental under the miscellaneous on the itemized deduction. Well, that section is gone, so too sad for those people who have the hobbies.
Yeah, so let me
or
give
the
an example. Let's
non-for-profit
say
rental.
that you love to do, you like to do not garage sale. And let's say you go to the flea markets, right? And let's say you sell $10,000 worth of stuff at the flea market. And what you used to be able to do is take your expenses up to $10,000 as a miscellaneous itemized deduction. You can't do that anymore. So that means that $10,000 is just going to lay there on the tax return, become taxable to you. And that would mean that if you're in the 20% bracket, you'd end up paying $2,000 in taxes on the federal and probably another $500 on New York State. It'll cost you $2,500.
Well,
however, on the state, they would allow you to take your expenses.
Exactly.
Yeah, I'll tell you, that's the hard thing you got to do. You got to wrap your head around it. Same thing with rental property. Many times people say, oh, Bertha's been living there for 25 years, and so we're doing rent for $250 like it was back in 1980. Not good. You have to remember, when you're doing these things where you get to reduce the income by your expenses, it means you are in business. If you're giving almost free rent to Bertha, they're going to make you claim the income and not take the expenses. So either raise Bertha's rent. Now remember, you can give Bertha back a gift, right?
Yep.
If you give her a gift, it's not taxable to her and it's not deductible to you, but that would be a way around it. But you got to get that fair rental value from Bertha.
Right.
Exactly.
Yep. So change what you're doing.
That's right. And I'm going to, and so if you say, oh, this doesn't seem fair at all. We're just trying to help you so you don't have a problem. The other thing is kids and investments. Mamma mia. That's a big thing, right? Who wants to explain kitty tax?
Sure. It used to be for kitty tax, which was the amount of earnings over 3,600 or 1,900 that you
unearned income, right?
Unearned income. You would pay at the parents' rate. The kids would. You'd be taxed at the parents' rate. Well, no longer is the case. Now you're going to be taxed at a trust rate or an estate rate, which is much higher. It can be up to
39%.
40%.
Very
So
fast.
Let's just say you were really a good saver for your kid. You say, we're putting all the money in this for our son when he goes to college. So he's got this great little nest egg, and this year he had $15,000 in dividends. What would this look like for this kid?
You said 15,000?
15,000.
Well, at least 2,500 of it would get taxed at 39%. Majority of it would get taxed at like 35%. Overall, they're going to be paying about 29% on that $15,000 to the federal.
So about $4,500.
Yep.
Right?
Yep.
So here's the thing. So if you've been really a diligent saver so Junior can go to college, what you really want to do is put it in something tax deferred so that unearned income isn't sitting out there because they're going to tax your kid at the trust rate. And some tax deferred income might be U.S. savings bonds. True, it's not growing much, but think about this. If you're paying 30% in taxes, on the money that they're making, that's a gigantic penalty. Those are things you need to do. So it isn't just doing your return, it's tax planning at the same time.
Right. It may not even be, it may come down to not putting it in your child's name.
True. That's true. But you know that's for the kid, right?
Right,
Why don't we go back to the phone before we finish these up? And we have
Tony, I think.
Tony.
No,
Hey,
it
Tony.
says Tant.
It says Tant. Well, maybe it's Tant. Tant, this is Esther. How can we help you?
Yeah, I have a question. I just have Social Security income. I'm 62, and my wife only gets $100 pension a month. Is there any advantage to filing a tax return for people in our situation?
Only if your wife were working. If she were to go get even a small job, because I'm assuming she's under age 65 as well, correct?
Yeah.
Then you guys would qualify for the earned income credit. So even if she just got a seasonal job, maybe worked a little bit at Christmas time, said she wanted to be a receptionist at EG Tax, those kind of seasonal jobs where she's making maybe $4,000 or $5,000, you'd still not pay any income taxes, but they would actually pay you an earned income credit because you're under the age of 65 with wages.
Yeah, and she's not collecting Social Security yet. And
Yeah, I know. This would be the earned income credit. They would give you money because you're working.
And I could work part-time as well without getting taxed?
Well, but you're on Social Security disability, are you not?
No, regular Social Security.
Oh, okay, yeah, either one of you. But so where you guys are, you're not paying taxes, and you're not getting the earned income credit. But let's say you say, I would like to be the Walmart greeter. I want to make $4,000. You'll actually get a refundable credit from the federal government because you're under the age of 65 and working.
Okay, and then when we turn 65, that's no longer.
Then it goes away. But you got 3 years, right?
Yeah.
Okay. Happy New Year to you. Thanks for calling.
All right, thank you.
I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on the cell phone. The other thing is, I put on here, don't get married. I will tell you, the marriage penalty is really out there strong as ever right now.
Yeah.
You just would be better off being single.
Because of that's double standard
deduction. The SALT deduction is $10,000 married joint, $5,000 married separate. But if you were two singles, it'd be 10 and 10. The mortgage deductibility, again, because you're married separate, would be it would be $375,000 versus $750,000. I mean, there's under the change in this tax law, being single is much better. And I know the two of you are looking at each other, and he says, "I told you we shouldn't be married." I mean, I'm for marriage, but not with my job.
I think what you said, you summed it up best. It sort of messes with your head.
It does mess with your head. Yeah. Should we talk to Carl quick?
We should.
Hey, Carl. How are you, sir? How can we help you?
Hi, Carl.
Hey, Carl.
Wow, that was a quick one.
We're heading to the end of the show.
We're at the end of the show. What can we help you with?
I've got two questions. I just got married. My wife's on disability, and I'm working. Should we be claiming joint, or is it better off for her to claim like she was?
Is she on Social Security?
Social Security disability.
Okay, so her Social Security would be 85% taxable if you guys live together. What I'd suggest you do, because I'm running out of time, is call us at the office, 632-7886. We'll work out the numbers both ways and let you know whichever is better. Probably filing jointly is going to be the best because you're going to get the higher standard deduction.
Yeah, and filing joint is going to be better because of the Social Security.
Right.
And
all depends on
that,
Carl's.
But, you know, so give us a jingle. We'll work out the numbers for you. There's no charge. Okay?
Okay.
Happy
and
New
what
Year,
was there
Carl.
a second question, Carl?
Second question is, I have a car that I'm not using. How much of a deduction do I need to give that car to a charity?
Okay, so the thing is, if you're a non-itemizer, if you can't come up to $24,000 in itemized deductions, then if you gave that card to charity, you're going to get nothing for it. So be very careful. People that think that they're going to get a dollar for dollar, that's what they're really going to get back in taxes. That's not the case at all. So again, give us a jingle. I'm Esther Gulius, the tax lady from EG Tax. Our phone number at corporate headquarters is 632-7886. Our website is egtax.com. The other thing is I want to make sure is if you're somebody that has employee business expenses and your employer's not reimbursing you, those things aren't going to be deductible on the federal this year. They will on New York State. Think about renegotiating your reimbursement through your employer. We'll help you with that. And don't ignore the earned income credit. Just because you don't have to file doesn't mean you don't want to file.
Mm-hmm.
So taxes are complicated. EG Tax is there for you. Until next week, I'm Esther Gulius, the tax lady, Tiffany Fabian, Christopher Fabian. Thank you so much. Happy New Year. Do what we say to do. You got 3 days to do it. Bye-bye. Have a great week. Bye-bye.